Life is beautiful. Ooh. Hey, 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 hey. Hey, good morning, everybody. How you doing? Can we confirm sound? Yeah, good morning. Yeah, sorry for the delay. I was setting up the webinar and blue screen. And so once that rebooted, turns out that Microsoft wanted to update my server. Yeah. Okay, great. Thank you, Microsoft. So anyways, so whatever. So I'm here. It worked out. Thank you for your patience. All right, well, we got a wonderful trading week ahead of us. We got technical and fundamental analysis to do. A lot of fundies going on throughout the week. We can talk about that. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Like I told my neighbor's kids, I said, hi, my name's, my friends call me Wayne, but you can call me sir. They're like, hey, wait. I'm like, you're not my friend. You're just the neighbor's kids. So anyways, hey, my name is Wayne. You can call me Wayne. You're my friend. I'm a currency trader. I've been doing this a long time. I'm here to share my experiences with the overriding goal of helping you become a successful foreign exchange trader as soon as possible. And the plan to take over the world is to make you a success. And then you'll open up a live trading account with TradersWay, and we become your trading partner for many, 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 many years of trading. Isn't that nice? That's the way to do it. Your success first. You'll pay it back through loyalty. We do these sessions 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at FX Street, where I am also Forex Speaker of the Year. And this Friday is Non-Farm Payrolls Live. Yeah. So hope to see you over there. Thank you to those who are posting their analysis and trade ideas on Forex.Today. There's a lot of great resources there. Lots of people are starting to participate, and I think that is a sign of very, very good things to come. Lots of good trading ideas. By the way, like John, for example, John's on fire. He's posting a lot of really great analysis. So if John, if you're in the room, thank you very much. Just look at like just in the last few days, July 30th, July 30th, July 31st, July 31st, August 1st. Really appreciate that. These are great, right? He's doing scans of, you know, the 4-hour dollar scan of the euro, scan of the yen. That's really cool. And that's the type of thing that I like. And then someone had commented on Marina's post earlier. Marina put hers in the activity feed. You should make a full post, Marina. But nonetheless, what Marina did is here it is. She went through this. She did a relative strength exercise, identifying the strongest versus the weakest for pairing. That's called a relative strength exercise. And if you go back to what John Boy was doing with his currency scans. Let's go, here's one. That's one use of doing a currency scan. Okay, so when I do a currency scan like John's doing here, one thing that I look for is what is the euro doing versus everything? And is it strong versus everything or weak versus everything? That'll tell you something important right off the bat. And then the other thing is, if it's like an index, like if the euro is the constant, then relative to the euro, which ones are the strongest and which ones are the weakest? Okay, you might find that euro is weak, but let's say CAD is weaker. And then you can do a CAD scan and see if there's anything even weaker than CAD. And let's say Aussie is even weaker than CAD, but by this scan you can see that CAD's weak. But then you look at CAD and you find that Aussie's weaker than CAD, and then you could determine that the Aussie is the weakest currency in the world, and then you could reverse engineer the whole thing and find the strongest. And that's why I do stuff like this, right? And thank you to John for sharing, and thank you to Marina for sharing. So one thing I do want to get through today as soon as possible is the fundamentals. So let's start with the commitment of traders report for the euro. Oh, got to get my drawing tool. Anybody trade the euro USD? Marina says, I look at all 28 currencies and why I can't place charts and give trades. Marina, the way that you upload charts and stuff is you just click upload. And if that doesn't work, you let me know. Because we care about what you think. We want to give feedback if possible. All right? You're important to us. You're our sweet baby. Well, if there's a problem, Marina, send me an email, wayne@fxbootcamp.com. Okay, so anyways, one thing that I'm looking at, yeah, thank you, Marina. Are you going to be in Johannesburg on Monday? I have to search for all my winter clothes because I have to leave. It was 100 degrees in Georgia yesterday, and on Monday I'll be in the winter. So. Anyways, okay, this is Euro USD, or I believe you do trade Euro, so first thing we should do is highlight the price action in Euro USD, okay? And that's this, that's what this line is. This is the actual Euro versus Euro USD currency pair, okay? Hang on. And each one of these little ticks is a week. Okay, so here we are. Sort of the high is around 115. More recently, we got down to about 110. The actual low is more like 105, which occurred back near the end of the year last year, right? A handful of rands.com, Marina. So there. It's out in Johannesburg, so you know, Ryan and his organization has really, and their partners have really reached out to the local Johannesburg Forex community. But yeah, it'd be wonderful to meet you in person. So anyway, so there's the value of the Euro USD. Now what we're looking at is how many traders are bullish and how many traders are bearish. Okay, pretty simple thing. So let's start with, I have to change the color here. Let's change it to black. Well, no, because I need that for the net. Let's do a different, a blue. Okay, so now what we want to look at are those that are short. Okay, these are just they're not buyers. They're buyers of short positions. Okay, they're shorting futures contracts. Okay, now what is the pattern since this bottomed out around the beginning of June? From June 1st, which is here, to today, where we are now, or technically last week, what is the trend? Bongs, you're going to be there, Bongs? Right on. Yeah, so more and more people are shorting. So should you be careful when the Euro USD is rallying? Well, we don't know yet. Hang on, let me move this up here. What is this? Security warning. No, I don't want to touch anything. All right, so more and more people shorting. So what about those that are buying? Let's do that in sort of a green color. Okay, let's find the ones that are buying the euro. This is week over week, which means this is a lot of water under the bridge, right? Okay, in comparison to this area here, to where we are now, or if you want, you can go all the way back to the beginning of 2015. What is the general trend for buyers of euro futures contracts? Are there more buyers? Are there less buyers? Or are there the same amount of buyers? Neutral, flat, same. So, is this useful information to find out where the money actually is? I think so. So remember, this is actual money in the market. This is people voting with their cash. Money in the market. So again, nothing's really changed for a couple of years. Nobody, is it fair to say nobody? No, I shouldn't. Because this is the neutral line right here. Okay? But not a lot of buyers in the market, and they're not really coming or going. It's all pretty stable. Okay, it doesn't really make the market bullish. And then look at, you're either buying or you're not buying, or you're selling or you're not selling. So let's try to do something interesting. Let's fill this. Okay, let's talk about how many bears there are, because we know the bulls are really stable. No, I can't do that. Hey, 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 hey. Cool. This is kind of a neat way of looking at it. Okay. This is the change in how many bears there are week over week over a period of a couple of years, right? Isn't that nice? You're welcome. So bears seem to come and go. And there's more and more bears again, right? As this is starting to move up, the trend seems to be more and more up week over week over week after week. And yet nothing really has changed in the bulls. So the way that I would summarize this market is you're either selling it or you're not selling it. And so when the price of Euro USD goes up, right, and we have seen it go up, it was way up there at 112, 113, 114. When it goes up, what's happening? Price is going up. Are people buying it? Yeah, it's people getting out of the market. Price is going up because people are getting out of the market, and the market just happens to be short. Isn't that interesting, right? So when you see rallies, what should you be doing? Probably shorting. And What is the reason for it? Why would the market be heavily short? Well, negative interest rates and quantitative easing in Europe could do that. Right? Yeah. And fundamentals, but more specifically on a central banking policy. Okay? And then this last line to look at, and I'll do it with an arrow here. This is when you add the bulls and the bears together. Okay? What you want to look at here, let me just finish doing my little thing since I started it. There's two things to look at. First of all, what's the trend? In this case, week after week after week and a week is down. But the other thing that you want to look at is relative to this zero water line that I have in blue. If price is below this water line, or not price, these little arrows that I have drawn, if they're below the water line, there are more bears in the market than bulls. Okay? So the way that you look at, or the way that you describe this phenomenon is the market is net bearish or net short. Okay? Okay? If price was above this this blue water line, then the market would be net long. Okay? So going back to the beginning of June, the market was technically net short, and the market has been adding, as of Tuesday of last week, to its short positions. Okay? Because, you know, the market could stay, the bears could stay in, and suddenly if the bulls started buying and this line went above like this, then the market would become net long, even though there's tons of bears. But what this shows us is nobody's buying euro. So it comes down to whether you want to buy a dollar today or get out a dollar today. What affects that? What affects whether you want to buy dollar today or sell dollar today? News. In what way? Jimbo says risk. Yeah, maybe. Yeah, in some cases, yeah. Want risk on, risk off. Potential for a rate hike. Yeah, you're getting closer. Once again, central banking policy. So if you said news or fundamentals or economic data, yeah, all of that is what the central bank looks at to make their decision of whether they should raise rates or not, or add to quantitative easing or not, right? And that's what moves the market. It's the market's guess on what the central bank's going to do. I have to always restate that. Because you could have, you know, a good non-farm payrolls, and that could be bad for the market. You could have a bad non-farm payrolls, and that could be good for the market. You could have a bad non-farm payrolls, and that could be bad for the market. You could have a good non-farm payrolls that could be good for the market. And you're like, well, what the hell does this all mean? Why is it all over the place? Well, it comes down to the market's interpretation on how the Federal Reserve Bank, in particular, the Federal Open Market Committee, how they'll interpret this data and adjust or not adjust policy. It's the policy that matters, and specifically it's the change in policy that matters. The policy could stay the same for 3 years, and the dollar probably wouldn't gain or lose much value at all, unless the market thought there was a potential for a change in that policy. So it always comes down to really the change in central banking policy. So this idea like good news is good, that's dumb. That's dumb. That's what amateurs think. Okay. Good news might be bad news, because good news may prevent the central bank from making a change in their policy, and therefore it would be a disappointment. So for example, let's say you want rates in the United States to stay low for longer. That's probably a good thing for the stock market, wouldn't it? Because raising interest rates is risky. So let's just say you believe the stock market's going to go up as long as the Fed keeps interest rates near zero. So if we have bad news on Friday for non-farm payrolls, it comes out 80,000 again. Right? Just 2 months ago, it was like 80,000, not 300,000, 80. All right, so let's say on Friday it comes out 80. That's bad news, right? No, that's good news. That's good news. Well, we had a horrible, disappointing non-farm payrolls, Wayne. Why is that good news? Well, the stock market will probably rally because money will stay cheap for longer. The Fed could not raise interest rates in September and maybe not even in December. So stock market rallies because the bad news is good news. Isn't that cool? See how easy Forex is? Yeah. Bad news is good news, and good news is bad news, but it may also be the opposite, so don't listen to me. Right. The thing is to know it in advance, right? Oh, Danny boy, your pips are calling. All right. Let's go through the calendar. Life is great. Life is grand. Life is good. Hey, we got a 49.9, right, on the Chinese PMI. Wah, wah, wah. You know, the government doesn't want to report anything below 50. Whoops. So it must really be bad if it's 40. If they report 49.9, right? It must be 29.9. Oy vey. Hey, did you hear that they're consolidating their steel industry? That's an interesting one. They're going to take all their steel companies and break it down to two. One northern steel company, one southern steel company. That's interesting. Why is that interesting? Well, who would that be interesting for? Australia. Why is that? Because they export to them. What do they export? Okay, iron. Okay, but the iron isn't steel. And coal. Thank you. So you melt iron into liquid magma iron, liquid iron, and then you sprinkle in some charcoal, cool it off, and what you have created is something called steel. Iron ore and coal just happens to come from Australia, specifically if you're from China and you need to import what you don't already have. You bring in stuff from Australia. And their coal is fantastic coal too, right? So you bring in the iron ore and coal from Australia. So why would this news be important to Australia? What could be the outcome? Boy, it looks really dark in my webcam. Demand, okay, how? Here, you answer that. No, it looks like I'm sitting in the dark. Oh, so maybe I am sitting in the dark. I guess that'll help a little bit. Life is great, life is grand, life is good. Rise. Okay, why would China consolidate their industry? Well, what's happening are there are too much producers and manufacturers of steel in China, and they create oversupply. Okay? So if China shuts all these guys down, it's easier to control 2 companies than, I don't know, 20, right? So what these 20 companies, and I don't know how many companies there were, but what they were doing is they were buying too much iron ore and coal domestically, and then what they couldn't get domestically, they would buy it from outside, like Australia, internationally, right, and then import it. But nobody actually needed the steel. But hey, Australia would be happy to sell you iron ore and coal, even if you didn't need it. Who cares? As long as you buy it. You're right. They don't care what you do with it. If you want to make steel that nobody needs, then by all means, take our stuff. Who cares, right? So if China now cuts the production of steel by controlling just 2 companies, they could much more easily control the whole industry. Then Australia might suffer because it would be less demand for their resources, most likely, right? Because the overproduction of steel would be diminished. Which means what? You need to probably move over to India and start buying steel mills, because in 3 years or 2 years, China will run out of steel and prices are going to go sky high. Because they're going to mismanage it, right? So right now they have oversupply, and eventually in 2 years they'll have undersupply, and everyone will be scrambling for steel. And who owns the steel companies in India? Is it the Patels or the Mattels or somebody? So anyways, you gotta. Yeah, but I'm talking the actual family. I don't know if it's Tata. Do they own the steel now? Mattels, yeah, that's right. So anyways, so there you go. So that's when I read the news, that's what I think about. So anyways, thank you for bearing with me here. PMI, blah, blah, blah. Okay, great. So euro and pound PMI. 52 out of the Eurozone, 48 out of pound. Okay, fine. But there's a lot more going on. We already know the trends and the risks, so these may be little news events. Maybe you can scalp them for 20 pips or so, but there's bigger news going on in the world, right? So like PMI out of the U.S., right? Is that today? That's today, isn't it? Yeah. So that's coming up. Yeah, we're right in here, this red line. So that's coming up today. ISM and PMI. Yeah, okay, fine. Yeah. Something may happen, but I don't expect anything terribly amazing. Maybe, I don't know. I don't know. I guess you kind of want to be here. It really depends on what happens. If there's something significantly good or significantly bad, I think it'll sort of twist people into maybe front running the events later in the week. But I don't expect anything unexpected. I guess that's what happens. So if you don't expect anything unexpected, sit there in case something unexpected happens. But you're like, it shouldn't happen, but maybe it will, but it won't, right? But if it did, so I don't know. It's sort of like sitting there waiting for Old Faithful, except it's not Old Faithful, so you don't know what's going to happen. All right, so we got the RBAs tonight, right? So that's good. And what's going to happen? Are they going to cut? What do you think? Resume the race to the bottom? Yeah. The only thing is it's a bit early in the right, a little early in the year. When's the next meeting? Yeah, I'm thinking, and Suge Knight says 68% chance of a cut. But wouldn't it be great if they held and just loaded the boat for the next meeting? So Shug says the market is expecting 68% of a cut. So you would think that that's almost for sure. Let's say 2/3 of the industry expects a cut. But boy, if they didn't cut now, then the next meeting would go to 105%, wouldn't it? Bob, that's all I can fit onto the webcam, but was that enough for you, Bob? But anyways, there's a lot going on in the commodity space, and a little more down would be fine by me. I'd like to pick it up 74. I'd like to maybe buy it around 74 on the yens. What do you think? So, I don't know, be there. It's going to be news. All right, like be there. And if they cut, great. And if they don't, oh my God, that would be crazy, right? Yeah, pig down to 1.3. Yeah, sure, why not, right? Like, guys, I would ask for you to simplify things, right? I always ask you to simplify. If you're a bear on the pound, then just set up all the different levels in which you want to sell. So, like discussing whether it goes down to 130 or not. To me, I don't even think of that. Who cares about where it goes? It's not my problem. I don't set the price. I only set direction. So, what the big, 130 psych level? Well, what about the big 120 psych level? Who cares, right? The only reason I care is I'm going to be sitting in Winston Churchill's chair in about a week. And I'm going to be smoking a cigar, and it might cost me $3 more, depending on what the value of the pound is going to be. Otherwise, I couldn't get 2 hoots. Yeah, I'm going to sit in Winston Churchill's chair where he smokes cigars, and I'm going to smoke a cigar. Yup. Life is great, life is grand, life is good, life is beautiful. Where's the chair? London. Yeah. So the RBA, that's it's gonna make tonight great, right? What a great opportunity to trade. That's the thing, and sometimes I go through this calendar and I may seem like I'm playing it down or brushing it off, but I'm at my charts anyways for crying out loud, like. You know what I mean? Like, so I look at him like, yeah, I'll be there for that. I don't expect much, but I've been doing this for so long, nothing surprises me anymore, right? Right? So it's just, okay, I'll be there anyways. So yeah, sure. PCE. Why would I care about PCE, for example? US PCE. Talk to me, Goose. Why is it important? Give me 2 reasons why PCE is important. That's my drum roll. Fed cares about it. Well, relative to what? Fed cares about everything. In comparison to CPI, thank you. So the media talks about CPI. The Fed uses PCE. And they're just different measurements of inflation. Great. Okay, now take it to the next level. Super bonus points. What's the other reason? What is it used for? Wink, wink, nudge, nudge. It's a subcomponent to, wink, wink, nudge, nudge, You know what I mean? Wink, wink, nudge, nudge. Aye. Inflation. No, we already got that. What's it used for? It's a subcomponent of? Yes, Stefan, it's only doing euro. But GDP, thank you, Roger. Yeah. Yeah, GDP actually has PCE in it. Cool. Nice. Yeah, so that's why it's important. Because if you're trying to figure out GDP, you need to have your PCE. Oh, snap. Later tomorrow, some Canadian news. Great, great, great. How about Kiwi jobs report? Fine. Okay, great. That's going to be Tuesday's Asian session, Tuesday night for the Asian session, which is Wednesday for the rest of the world. But Tuesday night, you got the Kiwi news, and then somewhere around midnight, pachow, BOJ meeting minutes. And the market cares about these things right now because we're worried about Abenomics. Abenomics. Right? So, yeah, so what are they thinking? When are they going to move? Are they going to move? What's going on? Funny thing is, I'm not sure if the BOJ knows the answer to any of those questions. Come on, Corona! Okay. And ECB. Boom, brum, bum. Yeah, that'll be interesting. Boom, brum, bum. Remember, Europeans are incapable of working during the summer, so non-monetary policy ECB meeting. Yeah. So basically, they're sending their interns, right? They're going to send their Indian and Chinese interns to a meeting. Right? Yeah, Dana's like, it's overall low trading volume. Yeah, sure. Yeah, here's what usually happens about this time of year, and by say about, right after the summer central bank meetings, right, that occurred, I don't know, it seems like a year ago now, a week ago. Once that's done, boom, everybody goes on vacation. Right, so right now all you see are the interns. Right? I was thinking maybe next summer I should sign up for like a Goldman Sachs internship. And they're like, wait, you're like 40. 44? We thought we were going to get a kid. You're older than me. Yeah. So, I'll tell you, I'm on board at Georgia Tech University, and I was talking to some of the students. I'm like, hey, so what are you doing this summer? Because, I would do, I actually did interesting things. I did public speaking when I was in college. So anyway, I'm talking to these kids. I'm like, hey, what are you doing? Well, they're engineers, right? So one guy's like, yeah, I'm going to fly to China. There's like $1 billion project that's being done, and I get to be out on the work site and, learn about engineering. I'm like, oh my God, that sounds like a great thing. How old are you? I'm like, 20. You're going to spend the whole summer doing an engineering project in China as an internship, and then come back and go back to school. Like, that is a great summer. And I talked to the other kid, and I'm like, what are you going to do? He's like, yeah, I'm going to work at Goldman Sachs for the summer. I'm like, what? What are you going to do? They're like, oh, well, they're just going to take me through all their departments and show me what they do at Goldman Sachs. Oh, my God. I'd pay $1 million for that, right? I'm like, no kidding. So, did you study finance? And he was like, no, I don't know anything about the markets, or I don't know anything about anything. Oh, wow. I'm like, why did they hire you? He's like, I don't know. I'm smart. I'm like, holy crap. Really? That's what you're going to do? You're going to move to New York City for the summer And Goldman Sachs is going to walk you around all their different departments and show you what they're doing? Oh my God. How do I do that, huh? That's what I'm saying. I should sign up for one of those. I should pretend I'm 19, and then I show up, fat and old and gray hair and everything. I got hairs growing out of moles. I'm like, yeah, show me what you're doing, Goldman. Yeah, maybe, Dana. So, wow, huh? What were you doing when you were 20? Right? I was doing important things, actually, but I feel like, what the hell was I doing? That sounds good. And then I think back, I'm like, oh yeah, I was sitting on a board with George Soros. Oh yeah, I guess I didn't waste my time either, but, like, wow. Still, I still am blown away by what the young youth get to do. How'd you like to live in China and build something, build a skyscraper in China when you're 20? You think these kids are going to go on and do amazing things? My goodness, huh? All right, so anyways, Bank of England, obviously the big thing on Thursday. I don't know what else you're doing on Thursday. Like, that's that, right? Thursday, yeah, let's see. Yeah, interest rate, the vote, the minutes, the monetary summary, their inflation report. Carney's going to speak. Like, what else are you doing Thursday? Right? Oh, well, yeah, don't forget about, U.S. factory orders. I mean, come on, right? Okay, great. And then another stupid Asian session, right? All there is the RBA monetary policy statement. Right? So we got like some kick butt Asian sessions this week, huh? It's going to be good. So, like, wowzer, right? And then you might as well take Friday off because all it is non-farm payrolls. Like, oh my God, non-farm payrolls. So I got all this trading to do, but it's also finals week at Harvard. What? So I got I have like Asian sessions, European sessions, New York sessions all week. It's just back to 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 back news. Meanwhile, I have to like study. And then on Friday do non-farm payrolls in front of 600 people, submit my final paper to my professor, then I'm getting on an airplane the same day I'm flying to South Africa. Like, yeah, but besides that, it's another easy week of doing nothing. Whew. Maybe be a father and a husband as well, maybe, if I can find time. Yeah, it's going to be a good one. So, great trading week, huh? Now, there's another thing that makes today awesome. New week, new month, which means weekly and monthly pivot points that are awesome. So, at FX Street on Friday in their premium webinars, oh man, it rebooted, but it didn't save my work. Too bad. On Friday at last Friday at FX Street's premium webinar, did anybody attend that? You have to pay money for it, but I drew this, and I drew this, and I know you can't see it. I'll have to readjust it. It didn't save properly after my little crash. Okay, but this is what I had drawn. Let me readjust it so you can see it. The reason it's not drawn very well is I didn't have all this white space to the right because I was predicting the future. That's the one thing about predicting the future. It's difficult to draw because it hasn't happened yet. But, okay, so I had that on Friday, and there are two things that I highlighted. If you're a bull, and the conversation was low, high, you may be a bull. So you would either buy it here at 31 or here at 30 because of the fib levels and pivots and all these different things that were in there last week. Okay? And so the general idea, the general idea was you either buy it here or you buy it here. And we ended that day here. See, so like if you look at the New York session, my coaching session at FX Street was before the New York Open. This is the New York Open. So, you know, it crashed right through, never gave you an opportunity to buy at the first level, and we ended the day right at the second level. The 618 area, right? Isn't that lovely? But what's the most important thing on Monday that you're looking for if you're a bull? What's the most important thing Monday morning? You're salivating all weekend. You're on your hands and knees praying to the God of pips. Please open at what price? If you're a bull. If you're a bull. If you're a bull. If you're a bull. Yeah. You got it. So, let me read just this. And what? Okay, so it opened here, double bottomed here pre-London. And what is that? Is that weekly M2? I thought Forex was difficult. Right? I thought it was supposed to be difficult. Well, what's so difficult about that? You were begging on your hands and knees, praying for price to open right here, so you bought it at the M2, right? And if it works out, you're going to be up here by the end of the week, which I already told you on Friday. If you're a bull, we discussed it on Friday, that the top of next week would be in here. Conservative target is 133. So you're expecting a bare minimum of 300 pips. If you don't get 300 pips, you're going to just be upset. And if you're wrong, what happens? Well, if you're wrong, what we know, and let me change the color of my highlighter. What we know is we'll probably have price come up into here, and it will fail, and your trade breaks out at break even. So in that case, it would need to go up to the, well, you tell me, what based on weekly pivot points, where would price go and then fall if you're wrong? Well, it shouldn't be difficult. You had hours and hours and hours and hours and hours and hours and hours, Bob. So somewhere in there on a 1 minute chart, I'm sure you could have found a way to buy if you were begging and pleading to the gods of Forex over the course of the entire weekend to give you an opportunity to buy. Well, so over the course of 12 hours in this area, there must have been an opportunity to buy. Right? Okay, let me go back though, guys. If you're wrong, if price is going to end the week lower, where, based on weekly pivot point theory, will the market return to bearishness? No. Where will the weekly central pivot to weekly M3? Thank you. So that puts us That puts this here, weekly central to weekly M3. That's what I had just drawn, right? So price does this, 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 this. And you're out and you've lost how much? If you're a bull. Yeah. So do you have a problem with that? See, it's opportunity. You can't control whether the market goes up or the market goes down. All you can do is control your behavior, and we call that a plan, right? That's all it is a plan. So if the plan fails, how much money do you lose? And is that risk worth the potential reward of if you're right? And the prime example here is how much, how far will this go up before you even get challenged, right? And is that enough to jam your stop at break even? Well, according to my eyeballing, you should be up somewhere between 50 to 70 pips profit by the time you even hit 131, which is a psych level, and a weekly central, and the beginning of your sell zone. So it seems to me, yeah, you probably, right? Now, do you take the 50 pips and run, or do you go for the 300? Well, it depends on the Forex gods you pray to. Okay. Now, can I ask you something? How many people were at their desk, hands clutched, just minutes before the market opened, and you're thinking, please give me that pivot point. Please give me that pivot point. 1 or 2 minutes before the market opened and you got your new weeklies and monthlies. Freddie boy? Peter? So have I changed your behavior then? Where you're sitting at your desk with intent? It's better than sitting down looking for a trade, isn't it? I wonder what's going on. I wonder what I should do. Looks like it's going up, so I think I should buy it. Oh my gosh, huh? Do you remember how you used to trade like that? How pathetic, huh? No, that's not what I'm saying, Dan. I'm saying you're sitting at your desk Monday morning waiting for the new pivots, and you already know what you would like to do. You just don't know if your plan is going to be fulfilled or not. You see what I mean? But like saying, "Oh my gosh, look at that! Oh my, I guess I should be buying." You're like, "Wow, holy smokes!" Versus saying, oh, I'm a bear and that thing's been going up, so where's the next level of resistance? Oh, well, I see the 4-hour 21 is probably at least 100 pips away. And then I see that old lower low as a possible roll reversal. So maybe if I squeeze it in there around a midpoint or around the full psych level of 115, that could be interesting. So then you open up your smaller time frame euro yen chart and you're like, okay, well, what do I see around the 115 level as resistance? And you start putting together a trade plan to short it in the future. And you're doing it because it is going up now. But you're not like, oh my God, look at it go up now. I gotta buy it, I gotta buy it, I gotta buy it. No, 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 no. Oh, it's going up now, but it shouldn't go up. Nobody is fundamentally buying the euro. So there must be some Japanese yen weakness in the market right now. Oh, sure enough. You know, big bounce on the USD yen at 102. And the dollar's not even that strong at the moment. So, yeah, there must be quite a bit of yen weakness. Okay. So, you know, and now you're planning. So that means maybe around the New York Open, maybe we can get closer to that psych level, and then I can look to short the euro yen again on risk-off moves. Right? Robeson, that's how you think. You look at your charts and you're planning what will happen the next session or the next day. And suddenly you sound like smart money, right? Beautiful, isn't it? So it's your job now to go through all the weekly and monthly pivot points and see how they moved over the weekend, and try to line them up with your fundamental bias. And your fundamental bias should be shaped by the potential of a central bank to change its policy, not necessarily what the policy is now. And then set up a trade for today or tomorrow or later this week. And then we'll regroup tomorrow and talk about it. Maybe if you take yourself seriously as a potential new Forex trader, once you've done your analysis of a let's say a swing trade. How about this? Here's a clear assignment. Look at all the weekly and monthly pivot points. Okay? Find one swing trade based on pivot point theory. It could be weekly pivots, it could be monthly pivots, it could be a combination of weekly, monthly, but you want to find a trade that's worth at least 300 pips. Okay? And then I want you to post it on Forex.Today. And I want you to document where the support and resistance is and what the trade will look like. All right? Probably look, let me pick on John here. It look like something like that. Draw it out, maybe take some notes, put it down there, but just, a week, again, weekly or monthly pivot points, swing trades worth at least 300. Doesn't have to be today. It could be later this week that maybe it sets up, but we want to know support and resistance and how you use your pivot point theory. Is anyone going to actually do it? To take it one step further, I just did this USD CAD for you. Doesn't matter if it's right or wrong. I only care about the process of your planning. How many people are going to do it? Yes or no? Use weekly and monthly pivot points to create one trade plan for a swing trade. Anybody? If you get it wrong, people might laugh at you. I don't know, it's really risky. What will your mother think if you don't get it right? Yeah, well, Paulo says, I'll try. That's the whole point, right? I'm not asking you to be an expert. I'm asking you to change your behavior so you can become an expert one day. That's my job. I'm trying to motivate you, inspire you. My boss says I'm not allowed to slap you. So all I can do is beg and plead. Okay. Thank you. I can't wait to see your analysis. And if you could spare the extra minute or two, it'd be nice if you guys could share feedback with each other as well. Take a look at someone else's, right? All right, so thank you. Peace on earth, may the pips be with you, may your profits be above average. I will be here tomorrow, and I hope to see you here as well. Good luck with the trade planning. This kind of stuff's going to make you a huge success one day, or you could just skip it. Your call. Cheers.